这样就可以开始。好。Good afternoon, everyone. And this is the second time we have an online course. And I think we have to be used to it. And I think we have several cases leading us to a little bit ahead of our schedule. And today we have two cases of New Century and Formula One. New Century is a very accounting-oriented case. Formula One, I think the case is, I think the company is famous, although not too many people are involved in Formula One. And everyone has been knowing the company, I mean the team or teams, among others. So Formula One is very special, unique. Formula One has securitized its so-called intangible assets, So today we have two cases, and the last time we had two cases too. Yeah, so a little bit rushed, and our contents of the PowerPoints has been a little bit behind our case presentations. Therefore, today I think I'll cover some of the contents of the PowerPoints so that we can catch up the schedule of cases. And today, because the two cases are a little bit advanced, particularly Formula One, which is securitized its intangible assets, broadcast revenues. Therefore, we need to somehow speed up our PowerPoints lecturing. And first of all, I think I need to have my the problem sets. We have 6 or 7 problem sets. Perhaps we covered the first one. So I don't know. I may have our PowerPoints, problem sets. So we have the problem sets, number 1, and I think we have several problems. So let's look at problem number 9, importance of securitization. So I think answers are outlined there: liquidity, mortgage for sales, standardization, availability, and affordability. Okay, so the answers are there to the question. And then problems 10 to 11 regarding the 3 GSEs, Fannie Mae, Freddie Mac, and Ginnie Mae. I think we have been talking about these 3 GSEs more than enough. So I think we know what they are, how they functioned. And then problem number 13, I don't know if you have your problem sets with you. Please, if you don't, just go to get them. There are, I think, a set of problem sets. Altogether, there are 8 problem sets. I think problem sets are for us to review what PowerPoints cover from 1 to perhaps 10 sets of PowerPoints. Okay. So number 13, what is the nature of mortgages? I think mortgages are a debt instrument which requires borrowers to repay their debt to lenders in a timely manner. Every month, borrowers have to pay their interest and principals back to lenders. And there are some restrictions, regulations about the mortgage. Okay. So the nature of mortgages requires us to understand the underlying asset. In turn, the GSEs and some private lenders, such as New Century, today we'll cover this case. So all the institutions which have assets in their portfolio would receive repayments from borrowers. So I think a mortgage is one of the most the most used assets for securitization. And I think if you look at your PowerPoint, the PowerPoint or lecture 1 or 2, so you know the nature of mortgages. More than enough. Okay? Mortgage is a kind of debt instrument from a borrower's perspective, but from a lender's perspective, that is one of the most important assets in its portfolio. Among lenders, mortgage consists of 40 to 45% of its assets. So it's a main asset in any financial, in any commercial banks. All right, and next, number 14, 15. I think these two concepts are very important. You should understand what they are, okay? They are very important. You need to know you need to know how to distinguish these two from other financial securities. I think you remember last time we talked about the Ginnie Mae 1 and 2, which were issued by financial institutions guaranteed by Ginnie Mae in 1970. So, and the Ginnie Mae 1 and 2 were the first securitization product. And so if you start producing something from scratch, what do you expect? This let me rephrase it. If you have a new stuff, new gadget, you want to launch it to the market, just like Ginnie Mae 1 and 2 were launched in 1970. Do you expect the product, the very initial product, the prototype product, being simple, complicated, or in between? Take a guess. Anyone in the class wants to give it a shot? At the very prototype stage of any product, okay, would you expect them, the prototype product, to be simple, complicated, or in between? What do you think? Simple? Or in between? I.e., not too simple, not too complicated at a prototype stage. right? Anyone? Can I see all of you? So right now we have a 31 online. Everyone has been registered with us for the course. So if you want to say something, just talk to us. Perhaps Raf, right? Raf, you want to vote on this one or two or three?
Okay, I must try to speak aloud or maybe use my application.
Okay, okay.
Actually, this question you already asked last session, and the answer was simple.
Okay, yeah, simple.
And it seems reasonable. So you don't know how this asset will behave, how
Right.
the market will react. But investors initially don't want to pay much.
Okay.
But of course, because it was governmental entity, so it's like how well it can compensate this problem. So
Right. And let's guess which of the two, say, Ginnie Mae belongs to one of them, pass through or pay through? What do you think? Although I haven't talked about it, just vote on these two. Which of the two? I rephrase it. Ginnie Mae 1 and 2 is simple. And does Ginnie Mae 1 and 2 belong to pass through or pay through? Take a guess, 1 or 2. Pass through securities are very much like straightforward, simple security, allows investors only return. And pay through gives investors disproportionately or disproportion risk and return, depending on your risk preferences. And my explanation tells us Ginnie Mae 1 and 2 apparently is pass through. Okay, because at the very beginning, Ginnie Mae 1 and 2 were for amateurs or even the professionals at the very early stage of securitization, and not too many people knew what they were. So Ginnie Mae 1 and 2 were simple, straightforward, and so pass-through has all the quality required by Ginnie Mae 1 and 2. Okay. So pass-through here, you can define pass-through and pay-through securities based on the PowerPoint I gave you, the lecture 1. Okay, and we will come back to these two when we get to the cases, which require you to do all the analysis, cash flows analysis, risk profiles of asset pool, and so on. So at this stage, you need to know what they are. That is good enough. Okay. The two securities are performing very differently, and you need to know particularly pay through. Okay, pay through There's A, B to Z trenches or classes. Okay, but pass-through has only one. Okay. So now let's move on to next question. So problems. Who are the major players in the ABS, MBS markets? Okay, almost everyone. You can be an investor. You can be an issuer. You can be a lawyer. You can be a CPA. You can be a rating agent. You can be an insurance company. Okay, so almost everyone can be the player in the market. Although not everyone wants to be, but at least everyone could be the player. Okay, one of the players. Then number 17, supply and demand of US MBS markets. Who supply to and the demand for the MBS markets in the US, in the world, and apparently in the world, I mean, back in 2008, there were so many players, investors, issuers around the world, and the subprime prices spread out throughout the world, not just in the US, okay? Asia, Europe, Australia, lots of countries suffered from the crisis. Very much like what we have now, the coronavirus spreads widely, almost, over 90% of the countries in the world affected. Just like in 2008, almost all countries suffered from the crisis. Okay? In a different degree, some suffered more, others suffered less. Just like the coronavirus infections, some countries are hard hit, others are minorly hit by the virus. Okay. And from the international perspectives, although the MBS issued, insured, guaranteed mostly in the US, but the products themselves, MBS, ABS, were and are very popular around the world. Okay? Why? Why MBS, ABS were so popular up to today? Why so? Anyone wants to give it a shot? Why MBS, ABS were so popular, even though we experienced the subprime crisis or credit crisis in 2007 and 8, and the European debt crisis followed suit. So why are MBS, ABS products so popular? I think the market, in terms of dollar term, it might exceed 10 trillion US dollars. MBS and CDO, CDS up to date, the products are very popular, traded. Okay, so first problem set finished. Particularly, you need to remember what they are, and at least these two are very critical for you to understand what the securitization, asset securitization is all about. Okay, problem set number 2, and I think this problem set is related to, or answers can be found in lectures 1 and 2. Perhaps you may look at the lectures. Okay, the lectures. Lecture 2. Okay. All right. So we go through problem set number 2 one by one, so that we catch up with the schedule of cases. We need to know what the asset securitization about. Okay, number 1, why are underlying assets homogeneous? So I may just I don't have the English name for all of you. Then I may just start from. Okay, some of you do have English name. How about Max? You want to answer the question? Why are underlying assets homogeneous? Mortgages. I can't hear you.
Professor, can you hear me now?
Okay, go ahead.
I'm sorry, but none of us here actually have the paper. So can you please repeat the question again?
All right. Why are underlying assets homogeneous? Such as car loans. Can we put car loans and the student loans together as an asset pool to issue securities?
Yes, we can. I believe we can.
Are you sure? How about
Oh, wait. But the risk is different. So I suppose that this is not a good idea. A different type of underlying assets should be pulled into one asset-backed security.
Right. Okay. So the question is again, why are underlying assets homogeneous? Apparently, you said
because of the same risks.
Yeah, same risk, same profile.
They're the same risk.
Yeah, same duration and so on. Right?
Yes, sir.
Okay, very good. All right. So
thank you, sir.
Okay, thank you. So we need to pool same assets into our asset pool instead of put different types of assets into one asset pool. We are unable to do it. Okay? One of the reasons is we need to price them. We need to measure risks of all assets in one asset pool. Therefore, we can't put different types of assets into one asset pool. We just can't do it because of risk, because of returns. They are different. Okay. All right. Number 2, is an originator an investor in asset securitization? Anyone here? Let me see. Two Trend, anyone? I mean, Two Trend, can you answer me? Two Trend, are you online? Are you?
Yes, I am.
Okay. Yeah, please. You have your microphone.
Professor, 220 is coming. Just give him a second. Give him a second. He's right next to me.
So are you guys all getting together?
Yeah, we're in the conference room.
We are in a group, Professor.
Okay, okay. So you can share your thoughts, and so you can get together to discuss. An originator is an originator, an investor in asset securitization.
Sorry.
Sorry.
Sorry, Professor, you were a bit laggy, sir.
Okay.
Please repeat.
So you hold on. You guys turn off your microphone first and listen to my question carefully, and then I think I have you have the problem set number 2. So if you have it, you can answer the question. If you don't, just listen to me carefully, and I repeat my question as I put it in the problem set number 2. Is an originator an investor in asset securitization?
No, right?
You can answer that. You can answer that.
I think the answer is no.
So the answer can be found in your PowerPoints I gave you. Can you guys find the answer somewhere? Lecture number 2.
It's the originator, an investor.
Yes or no? Yes or no? Yeah. True trend.
Yes, Professor.
Look at lecture 2, page 3.
Is the originator an investor in asset securitization? Yes. Is it on? Yeah, it's on. Just yes. Yes.
Okay, I think it's yes. Originator can be an investor in asset securitization.
Okay, so if you read lecture number 2, page 3, the second outline in the definition of security, a security is a financing in which an originator is not investor, and a loan is a financing in which the originator is the investor. Okay? All right? You hear me?
Yes, sir. All right. Yes, sir.
Okay, good. So answers can be found in your lecture, right? Number 3, what is the primary goal of asset securitization? Anyone here? How about Yarik? Oh, okay, hold on. Yeah, no, hold on. Yong Shun. Yong Sun.
I'm over here.
All right. Okay. What is the primary goal of asset securitization? Primary goal.
To make liquidity.
Echo, please. Too much echo.
Is it all right now?
Well, this is the second online class. I think you guys should be used to it. How come your microphone is always, I mean, not always, is echoing too much? I'm unable to.
How about right now?
Okay, all right, okay. So what is the primary goal of asset securitization?
I think it's to make liquidity.
Okay. All right. So turn off your microphone now. So then, what financial assets are suitable for asset securitization? Can my salary be securitized? Uriana? Juliana, can you hear me? Juliana?
Yes.
Okay,
Hello?
good.
Yeah. Can you repeat the question again, Professor? I'm sorry.
Securitization. And my question is, other than that, can my salary be securitized?
I believe salary cannot be securitized. Hello?
Why not? Can your salary or can all the salaries of be securitized?
I'm sorry. Your voice is. I cannot hear your voice. Hello?
Can you hear me okay?
Yeah, Professor?
Juliana, can you hear me okay?
Yeah. I can hear you. What's your question? Why
Okay.
salary cannot?
Can my salary be securitized?
I believe so.
No. No. My
Okay.
salary can't be
Oh,
secure. Can't.
Okay.
Cannot. And how about your salary or all of the salary of everyone here in the class?
Cannot be securitized.
Next question is why? Why not?
Oh, why not?
Yeah, just like what the question listed on problem set number 2. What financial assets are suitable for asset securitization? Apparently, your salary, my salary, or anyone else here, I mean, the salary of anyone else here cannot be.
Hello? Oh my god. Professor?
Yeah,
I'm sorry, your my connection is really bad.
then
Hello?
I'll continue. Okay? All right? Okay,
Hello?
you turn off your microphone. If the connection is bad, just leave it alone. I'll talk to you later. Hello? Hello?
Okay.
Okay, yeah, talk to you later. You turn off your microphone. All right? Okay, so financial assets are not all financial assets. Your salary, my salary, your parents' salaries are not suitable for securitization. Next question, how do you define asset securitization as a structured financing instead of just traditional financing? Anyone wants to answer the question? How about Jenny Young? Jenny Young? Anyone here? Can Jenny Young hear me? Okay, Jenny. Ah, so bad. Oh, okay. Oh. Okay, I know. Okay. Gabriela? Are you?
Oh, yes. Hello. Yes, I'm here.
Yeah, okay.
Okay, so
Who
the
define?
the structure financing, right?
Yeah. How different is structured finance from traditional financing?
The structure financing, I guess it's which is a transaction that has been legally structured. So like they have solved the tax and accounting matters, and the cash flows is repackaged, and so on.
Okay, can you give me, because we have been through the process of securitization before, I think you remember there's a kind of intermediary between borrowers and the investors. So so how do you define securitization as a structural financing? Very different from traditional finance. Intermediary in between. So can you do you remember what that is?
Was it the SPV?
Okay, very good. I think
Yes.
yeah. Okay. Can you use your microphone somewhere? Yeah, using your microphone so that everyone so we can hear you.
I'll try, but here may be an echo. This intermediary may be, for example, special purpose vehicle, because the purpose of securitization, one of the purpose is to remove your debt from the balance sheet. So you kind of doing all the spin-off, and the special purpose vehicle may issue the securities.
Very good. So I think we got.
Oh, wait.
Okay, very good. So I think structured financing is very different from traditional financing because we have a special purpose vehicle which allows us to have true sale assets from the originator, and then SPV is allowed to issue securities based on or use the collaterals to issue securities investors. So everyone, particularly, I already mentioned many times. Okay, and then so there's a big issue here. Question number 6: direct securities, structured financing, and traditional banking. Okay, I ask you guys. Is asset securitization a direct security or indirect security? Or direct financing or indirect financing? Anyone here wants to give it a shot? Direct or indirect? How about Guo Jiaxin, Jiaqi, sorry, Jiaqi, can you?
I can hear you.
Jiaqi, sorry.
In
Indirect or direct?
because the fund is not direct.
Direct or indirect? I can hear you, Jiaqi. I can't hear you.
Because get the money from it.
Okay. I think the connection or the internet is not so stable. So I think we have room to improve in the coming, or I think Zoom or Meet or WebEx, all the internet, the online platforms are not so stable. Okay, so you guys may find a new way to grab the market. All right. Number 7, why do capital markets require excess layer of equity capital from originators? And this question gives you some kind of shed some lights on what you can do in the near future, particularly for so-called fintech startups. Okay. Why do capital markets require excess layer of equity capital from originators? Remember, from originators to investors is a long way, right? Borrowers, this end, right, going to the other end, right? Investors. Why do we need so many layers? And any one of them can be one of our businesses for startup. Okay, so you just figured it out. How can we grab some markets from this long process? Okay. Okay. Number 8. Why is asset securitization more efficient? Apparently, borrowers get funding to buy things they want, buying cars, buying houses, buying or borrowing money for education, for traveling, what have you. So the process allows us to do lots of things without putting your money first. Instead, you borrow money from lenders. Okay, okay, it's more efficient apparently. Okay. And what are major innovations in asset securitization? I think you can find answers in lecture number 2. There are lots of innovations, such as the design of a special purpose vehicle. Okay, and this is some kind of innovation we can copy. No one says that we can't, but unfortunately, I think I mentioned several times that 10 more years ago, I initiated a proposal to the Ministry of Financial Affairs, one of our government ministries, and no one cared about my proposal or our proposal. I was the originator of the proposal, and the other professors from NTU, from NCCU, just stamped on my proposal. Okay, they rubber stamped my proposal, and then the government didn't respond to us. Although, like Fannie Mae, Freddie Mac, this type of institution are very unique around the world, and I tried to copy that, but our government didn't understand, didn't recognize my proposal. So sometimes, so you guys remember, right? Copying. So remember this. Copying is one of the ways to succeed. You just take that into account. Okay, copying is a way to one of the ways to succeed. Don't think copying is a lousy strategy. Sometimes it is not. It is one of the ways to succeed in many different industries. Okay, copying is sometimes well respected in the West. Don't think Germans are not copycats. They were before. Americans were copycats too. They were copying the machines and all the so-called Industrial Revolution results from the United Kingdom. Okay, just like Germans copied British innovations 200, 300 years ago. So Germans did copy. Japanese copied too, right? So don't think copying is a wrong strategy. Although at the moment or in this era, copying sometimes violates the copyright. But if you can copy some business models, then you're able to succeed sooner than later, right? Okay. Incentive for all participants to securitize assets. Why you securitize? Why I securitize? Why Bank of America securitized? Apparently, there are lots of reasons. And I think early on, Jiaqi or someone else talked about liquidity. Okay, liquidity is one of the purposes. But you listen carefully from investors' perspective. Why do you want to invest in and in MBS, ABS, or CDOs, or even CDS. So what's the purpose to invest? Anyone here? You don't have to just, wait for me to hard call you guys. You just answer my question voluntarily. Anyone here? We have one, Ralph here. Okay, you want to give a shot?
I want to end Tom.
Investors, from investors' perspective.
It's kind of more wide way to
Hello, can you hear me? 我可以说话吗 Okay, so many investors they think the advantage of securitization, maybe they believe that it will not lose their money with this investment.
Very good. You are in our lab? Are you in our lab?
Yes, I'm in a lab right now.
Okay. All right. Okay. So, okay. So there are different purposes for different participants, apparently, right? Say, rating agencies' perspective, they just want to make profits, right? If they rate securities issued by Bank of America or from Wells Fargo, they just take fees, right? For CBAs, lawyers, guarantors, all the institutions participating in this transaction want to make profits. Investors want to make profits. Originators want to make profits. Everyone wants the piece of the pies, right? So everyone wants to make profits. During the process of securitization, there's a risk involved. So when if you want to make, participate in the process, you want to make profits. At the same time, you need to measure risks, correct? Right? So there are lots of different incentives, but everyone wants to get a piece of pie from the process, right? Okay, for the benefits might, I think, originators have liquidity, profits, and making the, say, commercial banks having a higher so-called capital ratio, right? So there are lots of benefits. What benefits might investors have? Profits, of course, liquidity, and so on. What benefits might other participants in asset securitization have? Same answer to the question, the previous questions. Everyone wants the piece of pie, which is profits, right? No one, so remember this. Everyone in the transaction of any kind wants to profits. Here, commission fees, transaction fees, servicing fees, guarantee fees, insurance premium, and so on. So everyone wants the piece of pie. And last one, what impact do you think asset security might have on our economy? Once again, liquidity. And remember, asset securitization makes, you listen carefully, asset securitization makes the financial markets, any country, perfect. Asset securitization perfects the financial markets. Okay, without asset securitization, the market is imperfect, okay, or incomplete. Okay, next. I think we have two cases, and Okay. The problem set number 3 is about underlying assets. Okay. I think asset securitization products mainly for mortgages. Okay? We have mortgages securitization, which consists of perhaps 50 to 60% of the markets, asset securitization markets. Okay, REITs is another category. The market is also huge, but somehow MBS markets is one of the biggest among all the securities markets. Okay, markets perhaps. Okay, bond. We categorize asset ABS as bond markets. Okay. So let's take a 5 minutes break, and then when we come back, group 4 to present case number 4, New Century, and then group 5 to present Formula One. So these 2 cases are very interesting, and hope you guys find them challenging. Okay, 5 minutes break. Hello, everyone. We're back to business. So are you ready, Group 4? Hi.
Hi. Can you see us?
Yes.
Okay, okay, good.
Very good. Go ahead. Let's start.
Okay.
Shall we?
Yes, sir. Give us a moment. Okay, it's done.
How can I change the slide?
Yeah, I'll do it. I'll do it for you.
Hi, Professor. Good afternoon.
All right. Go ahead.
We have to
Somehow there's an echo.
introduction and
Turn off your
Everyone is turned
yeah,
off.
except mine is yeah. I'll turn off your volume because you can hear
Okay.
the laptop.
okay.
Okay.
Can you hear me now? Okay, we are done. So let's get started with the introduction.
Okay.
This case is about the New Century, the financial company originated and serviced, sold, and securitized huge volumes of subprime mortgages. It was set up in 1995, and there are several key members of the company. They are Brad, the vice chairman, and Robert, the chairman and CEO. Three of them are the founders of the company. 2006, Bindra as a new CFO as a board company. And in 1997, the company went public and was listed on Nasdaq. And from 2002 and 2004, the company flew high and its stock price was traded at a historical high. And 2005 and 2006, the US housing market began to New Century, they still showed their were profitable on their financial statements. And then in February 2007, New Century announced it had misstated its financial the last period, 2005 and 2006. And in April 2007, New Century filed for bankruptcy protection. Now let's jump into
Hello, Professor. I'm Maggie, and I'll answer the question 1. What did the industry of subprime mortgage look like before 2007? So first, I'll separate it in 3 parts. The first one is 1990s. So in the subprime mortgage were of the total number and value of mortgages organized in U.S. but by an increase in access to capital markets through loan securitization in 1990s and early 2000s. The subprime industry growth experienced significant. And also in 1997, subprime mortgage organizations constitute about 125 billion US dollar. But the industry hit a bump with Russian debt crisis in 1998, and the growth was slowed down, and it makes the crisis make that investors want to find higher quality credit for the subprime. And this caused some subprime lenders, they went bankrupt, and surviving firms forced more on the credit quality. And from the second part, from 2000 to 2003, the subprime mortgage is only 8% of all the residential mortgage organizations. But in 2003, there are some factors that led to the in subprime mortgage organizations in subprime securitization. The factors are rising home prices and increasing focus on the commercial banks toward retail lending, and also the fairly low default rates among borrowers. last part from 2007. This part in 2005, the industry accounted for 625 billion US dollar and 20% of all mortgages originated. But in 2006 and 2007, this would change drastically. After decades of strong growth, the market weakened and collapsed in the fall of 2007 as interest rates increased and home prices dropped. But how could the subprime market grow? It is so big. It's during the time between 1990s to 2006. It's because the subprime industry growth was driven by an increase in access to loan security, the pooling and reselling of loans to investors, and securitization of loans backed by real assets, such as automobiles and home experienced significant growth, since these assets were homogeneous and credit risk was spread over a large number of the individuals. So next.
Okay, hi everyone. Hi Professor, I'm Harvin. I'm going to answering the question number 2 for where the accounting policies and business practice of New Century is the seeds of its demise. And consider that the accounting policies and the business practice were indeed the seeds of its demise. According to the examiner, there are 3 main accounting errors that cause material misstatement, which are the calculation of the repurchase reserve, LCM valuation of the loans held for sale, and residual interest valuation. And for of the repurchase reserve, the company for the repurchase to use of other rate. The company do the interest recapture in the calculation from 2005 to second quarter of 2006 and in third quarter of 2006, the company did include the interest recapture, but it said they exclude the future loss severity. Besides the allowance calculation, additionally, the company did not record any of the backlog repurchase claims up to third quarter of 2006, which amounted to $421 US. This misstatement affects the understated of liabilities and the related expenses. While for inventory to compare between the cost of the market and fair value and execute impairment for inventory that has lower realizable selling price compared to the acquiring cost. The company has mistakenly appraised their own inventory by combining all type of loans and offsetting losses from certain loans with gains from the better performing loan pools, which resulted in the overstated inventory of relating expenses. The third miscalculation referred to the residual interest valuation, where the company calculate the present value of the future cash flows using the discount rate, while New Century used discount rate ranging from 12 to 14%, while mostly competitors use 15%. But rate, the calculating and overstating of the residual and 7. New Century execute the restatement quarter 1 to quarter 3 2006 financial statements due to the miscalculation regarding the allowance of repurchase. This restatement will reduce the company's earning and record loss for the year end of 2006. This restatement announcement caused the New Century stock for 36% and further 76% decrease in the next couple of days after the company's announcement regarding late of 10K submission. Business practice with so-called warehouse loans also take parts of the demise, where this practice requires New Century to maintain a ratio and be exposed to the margin calls. In March 2007, the company was unable to satisfy the 70 million of the 150 million US dollar in margin calls. from its warehouse lenders. But new of the offer also attract. In fact, the value of the assets used as collateral was much lower than presented. But besides its accounting policies and business practice, the negligence of the company in rectifying the loan quality issue take a huge part of the company demise. Continuing to the
Before you proceed, group, not just you, and how wrong can LCM go if the company, the New Century discounted its residual interest with a higher interest rate? So how wrong can it be? Said Century used the higher than average return to discount its residual interest, and I don't see with this practice. You said the competitors use much lower return to discount, but each country, every company has its own discount rate. I don't see that is a group.
Sorry, Professor.
Asking why it has to be.
So we have, how come we have 26, 30 something? What's the registered students here all together? Should we have like 30? Okay, all right. Okay, go ahead. Your group? So how do you respond to my question?
Okay.
Anyone of you?
Yeah, you're saying about the interest rate for the residual valuation, right, Professor?
Yeah. Yes.
Yeah. Yeah, we do agree that every discount rate, but what we found from the New Century is it's far below the other, not below enough comparing to the other competitors, and resulting and overstated of the estimates for residual income from the future. So which the company is overstated assets.
So if, say now we have LCM requirements, so any company should record lower of cost or market price, correct?
Yes.
Right. Now, if you use higher interest rate to discount, the price residual interest might be lower than the cost.
Yeah, but in this LCM valuation, they don't really do an added valuation. Well, they just use a very basic Excel calculation for the LCM.
Yeah.
So they don't really do impairment of their asset actually.
Okay. Okay. That makes sense. Right?
Okay, thank you, Professor.
Okay, go on. Next question.
Hi everyone. Question is, did the auditors of New Century do a good job to protect the company or stakeholders? We consider the auditors of New Century didn't do a good job to protect the company or stakeholders. And the reason there have number one, the audit committee had expressed quality. The committee didn't consider it a priority 2004 and 2005, and its attempt to as loan quality issues were not affected. Number two, KPMG didn't complete the 2006 fiscal year end audit and consequently no thought report was filled. The last set of financial statements for which filled is on for fiscal year 2005. However, New Century announced that its 2005 financial results were also inaccurate. Number three, the auditors knew of improper change in the repurchase calculation methodology made quarter of 2006, but didn't question the repurchase reserve calculations made by the company. Number four, the auditors approved of after inquiries while LCM valuation of loans held for sale. Here, continue number four.
For how well or bad the New Century managed this balance sheet. So it seems that New Century did very well balance sheet, but when an examiner identifies there's several mistakes on their accounting practices. So there are four main mistakes of New Century. So let's talk about them in detail. Regarding to repurchase reserve, so New Century just calculated this incorrectly because they usually they're using historical data which was unreliable and did not reflect the current market environment well, resulting in the repurchase estimate of $70.6 million and allowance $7 million at the end of 2005, which was included as part of the account payable and accrued liabilities. The internal audit department the processing of repurchase claims, and New Century did not possess adequate control system to log, process, and track repurchase requests. And they also never included interest recapture and wrongly included inventory severity as a part of the repurchase reserve calculation. And talking about interest, so mentioned about it, I just like briefly repeat it quickly. And the discount rates they were used to compute residual interest were below those used by most its peers. New Century estimated prepayment rates and loss rates based on the average historical performance of its 1997 to 2002, and not taking into account changing market conditions. They were also using wrong value of all loans. And talking about the loan held for sales, New Century failed to apply LCM valuation for it. And New Century only grouped the residential and commercial loans into for valuation. By FAS 65 required firms to group them separately. Three loans have a sale portfolio was overvalued and the values scratched, and other non-performing loan pools were not written down on the timely basis. The last mistake, loan losses. There were several inadequacies relating to improper documentation of calculation methodology and lack of the regular updating to reflect actual loan loss performance. And the examiner's allowance for loan losses calculation models were poor predictors of actual losses by New Century, but they made no changes to modify its practices. And with the question, next is question 5.
Hold on. You group? Okay, hold on. Can any one of you tell me what residual interest? Anyone, not just to train Max or whoever, tells me what residual interest is. How can New Century get residual interest? Or where did New Century receive residual interest? And what is it? Anyone?
Okay, can we have 1 minute to the answer, Professor?
Oh, you want to finish question number 5 and then come back to number 4?
Okay.
Go ahead. Okay.
Good afternoon, everyone. And I'll be question 5.
Okay.
Okay. Basically, the question is, can you find a counterparty in Taiwan to reflect the New Century's episode? Well, before we dive into the detail of it, I want to say that it is really hard to actually find a carbon copy of this company. But if we go down to the core of the problem of the company's demise, is that it's the decline of the credibility. They become illiquid. And therefore, my case, the company that I chose from Taiwan that is kind of like this is this company called Guang Limited. You probably never heard of tennis racket manufacturing companies. And back in the heyday, which was the 1978 and 1990s, they were the first company to first make carbon fiber rackets. And therefore, they had 1/4 of market by 1980s in the world, and their failure. Let's just we'll just jump to the conclusion first. Is that they overextended. And next is that the crisis was caused by regulations, and another thing is that they become a guarantor of somebody who did not uphold their end of the bargain. Let's go into the details. Well, first, by around 1990s. 1989, their stocks become listed, and their stock price went from $20 to around NT dollar in NT dollars. And then therefore, every bank in Taiwan was eager to actually lend them money because they were doing so well. So their first overextension was that they invested 600 million NT getting their founding companies. And second overextension is that they invested in a computer company called Architect in California. Thirdly, the overextension is that they invested in several distribution channels in France and actually became the first Taiwanese company to be listed in France. And then their overextension 4 would be that they invested 600 million NT dollars in construction companies in Kaohsiung. And their overextension 5 was that they spent 10 billion NT dollars to fund their own bank. This was that they diversified into non-tennis related business, which they did not know very well. And 6, like the computer company and the construction company we mentioned before. And the 6th is that they were starting to build factories in Changsha and Thailand in order to lower costs, to be more profitable. And therefore, when they're trying to do all these overextensions, they pledged their stocks, which was $200 at that time. And for every $200, their stock price, they could borrow around $100. And when the stock price dropped down to about $100, they could still borrow around $50. So those are actually short-term loans. But those short-term loans were actually used to invest in long-term investments. No, in terms of management. So it's a lot of mismanagement in this part. Next, we can look at the first liquidity crisis. Back in the year 1990s, Taiwan started to transfer tax, and that caused the stock market to turmoil, and that people are starting and actually sell their stocks, causing the stock price of Guangnan to decline. And therefore, Guangnan, the founder, Luo Guangnan, had to spend a lot of time going to banks to comfort them that the any trouble. But in fact, they are actually having a little bit of liquidity problems. As mentioned before, in the fact that they borrowed short-term loans to invest in long-term investments. Then the season 2 of the liquidity problem is that his brother, who was in the business, his loans, and with Luo Guangnan's Guangnan Enterprise as the guarantor of his brother. So a bank started to recall the debt made by his brother from Luo Guangnan. And therefore, he had to pay for the money that he didn't even borrow. And because of this, their cash flow started to face certain issues called like they didn't have any cash flow anymore. Therefore, they also tried to manipulate the accounts and to make it look better. So they actually sold companies that wasn't even listed yet to make it look like in their balance sheet, and which was, of course, it's illegal to do that. And therefore, the other banks started to worry Luo Guangnan no longer has any cash in their balance sheet, so they started to recall their loans prematurely, which ultimately makes Luo Guangnan unable to pay off all these debts that he borrowed before, which led to the demise of the company. And this is why nowadays you no longer see their products in most of the market in the world, except in some. There's still some of their brands in Europe and South America, but in the major market like the States, they no longer nowadays is and that is the example I found that kind of matches the New Century's case. Thank you very much.
Okay, interesting. Guangnan Enterprise produced Canex rackets. Remember,
Canex.
You are old enough. I used to have one the Canex racket.
Yes, sir.
Yeah, very interesting episode occurred in Taiwan, and Guangnan was very successful back in the 1990s. And I think liquidity was a problem, and I think that the company overinvested in the businesses, and somehow the company had some similarities and some differences from New in production, the other is in finance. But I liked your the example and the episode. Interesting. Okay.
Thank you, sir.
Yeah, very interesting. How about the question I raised early on?
Yes.
Yeah, how about the residual interest? Anyone? Yeah, you don't responsible for the question, but somehow ask back to your group what residual interest is, although you kind of analyze what the problem was regarding residual interest. But the first thing first, do you really know what residual interest is, and how did the New Century have so much residual interest in its balance sheet or portfolio? So how? What? Anyone? Or I can give you the answer. Otherwise, we have another. The formula. Anyone here? Chu Chen, you want to on it?
So actually, for your question about what is the residual interest, I think that is just the net assets of the New Century.
Sir, I think the residual interest is the difference between the interest payment and the interest on the balance.
No, not that true. So that's
No.
not what. That's not what a residual interest is. It has nothing to do with interest. Okay, in the first place, residual. Residual. Okay, don't worry. We will come back to this sometime. Sooner than later. Residual interest is one of the securitization product. I should call it a product although it's kind of the result of We'll come back to this, but you need to know what the residual interest is first. I don't know if you can find it online. Say you may Google it. It has nothing to do with the interest, nothing. It has some condition. Okay, when you issue MBS, ABS, you have something left for issuers to bid in order to kind of convince investors that issuers have something in its portfolio. In case there's something going bad, issuers or the SPV will take the loss first. Are you with me, you guys? It's not just for your group. Okay, residual interest is some kind of equity interest. Equity. Okay,
Yes.
you guys. Look at the blackboard. So you look at blackboard. Answer my question myself, right? Can you see me okay? Can you see me okay? You guys?
Yeah, we can see. Yes, sir.
Yes.
Okay, all right. So I show you the SPV once again. Okay, SPV have a mortgage right here, right? MBS or ABS, something residual interest presumably should be the equity of SPV, but SPV is a special purpose vehicle. They do not hold equity. Instead, New Century will keep residual interest in its like assets. Okay, this is what the residual interest is, and the purpose to have residual interest is to convince investors that in case some of the mortgages default, say 10% of mortgage default, the loss goes to New Century first. Why? Because residual interest is held by New Century. Okay? If this is presumably 10%, then the first 10% of the losses caused by the default of will go to New Century. Okay, this is about I write it correctly. Okay. This is part of the game, i.e., Century has the skin of the game in order to convince investors that in case there's a 10% of the losses coming from the default, then investors don't have to worry about less than 10% of the all losses caused by the default. Here, for instance, if there's a 4% or say 5% of mortgage interest default, then 5% of the losses will go to New Century. the worst scenario of the residual interest is that, you listen carefully, okay, guys? In case the losses of V goes over, say, 20% of the mortgages, when bad, okay, who will suffer from 20% of mortgages defaults? Apparently, investors will have some losses. In this case, some investors will suffer from 10% of the losses. If 20% of mortgages go bad, okay, 20% or 30%, i.e., investors will take higher than the percent of residual interest losses as their losses. Okay, so this is the game because I didn't explain it. If you don't know what the residual interest is, then you don't know how to, continue. Make sense? This here, New Century keeps residual interest as its asset. Oftentimes, for any company, right? Any company, okay, say Apple, say Microsoft, for instance, that's liability, equity, right? If this is $100, this is 50, right? 50, for instance, right? If the value of assets goes under 50, say $50, say let's say $40, drops to $40, right? All equity gone, right? And drops to $40. Are you with me? Okay. So this is
Yes.
the end.
Yes.
Okay.
Yes. Okay.
Okay. Very good. So let's. Any other question regarding New Century? I think this company is very unique. But now in the U.S. In 2020, there are some big New Century-like companies. Okay, they are doing the same businesses as usual, but the COVID-19 spread so fast, so wide. Some of those so-called New Century-like companies may have some trouble. Okay, so just give comparison. All right. So let's take say 5 minutes breaks and group 5.
Thank you, Professor. Thank you.
Yes. Okay.
Thank you.
Thank you very much. Group 4. Good job. 5 minutes.
You mean you can understand the Chinese?
No.
No. What do you mean? Yeah, that's all.
No.
Check.
有，我试试看。怎么了？我开这里。哦。
有了吗？
有，然后对这个，哎，你已经有了，哦，在这里，哦，等一下，OK，然后，哦，
看到了吗？
有，哎，那要怎么显示？哦，好。我还没开呢。哦，我们刚刚画面看有没有？这画面，看我在。然后那个。哎，所以按这边按下一张投影片，这边就会跟着下一张。应该吧？有。哇！按 ESC 就可以关掉这里。哎，我看那表不用听到。我在这里看嘛。先透露。就我在这里先拍。你刚刚那边有听到我们声音吗？哦，很好。可是我们现在关麦克风了啊。可是关的还有。你有开麦克风？
应该有吧。
哎，还有。
Everyone, we're ready for the second presentation. Okay, the second presentation is about Formula One, how to securitize intangible assets, which is broadcasting revenues. And we have a good wife to present. Please. All right. Please.
Right. Professor?
Yes.
Can you hear us?
Yes, I can.
So, hi, we are Group 5, and today we are going to introduce about the Formula One. So, in 1997, Formula One auto racing plans for a Formula One IPO, but the plan had been put on hold owing to disputes with Formula One's team. In 1988, Formula One made 2 billion structured financial placement managed Formula One to IPO in the future, and it would under the category of an ABS. So, what is ABS? ABS is where financial assets such as mortgage, automobiles, loan, and trade or credit card receivables were put together to support payments on a created security, which in turn provided cash to the owner of the assets. And its basic level, the goal of securitization was to isolate the financial assets that supported payments on the related ABS. And it allowed the originators to create a security with a higher credit rating, thereby lower its cost of capital, and also to remove the assets from its balance sheet. But Formula One's ABS was different from normal ABS. It is intangible ABS, and we will talk about this later. Formula One is the company that holds the FIA, a Formula One World Championship, and the exercising of the sport's commercial rights. And they kept their financial information private until the time of IPO plans when investors required more information about their finance and operations. More than 50% of F1 revenues came from television broadcasting, and their corporate structure behind the bond offering was very complicated. And it is also one of the reasons that made Formula One offered an intangible ABS. So now is our question 1 about evaluating the proposed deal structure. Okay. So there are 3 points that the Formula One's ABS was different from normal ABS. One is, unlike tangible assets supporting more sustainable cash flows, it's based on intangible assets. The cash flows supporting the issues are from long-term television broadcasting contracts. And the second point is it was issued in Europe, where with historical little ABS. And the third point is the size of the issue publicized was unprecedentedly large in both European securitization market and intangible asset securitization. And the timing that Formula One issued its bonds was bad because it coincides with a sharp downturn in the international corporate bond market. And 3 rating agencies, Fitch, Moody, and Duff & Phillips, will give the issue of Formula One bond and single A rating, well, evidence from recent weeks suggests investors want to buy only bonds rated AAA or AA. Therefore, we think investors might be unwilling to invest in the market.
Question number 2. Under the proposed term, where do the Formula One floating rate note, FRN, fit in the continuum of financing choices from the debt to equity? So FRN helped Formula One to finance during the IPO postpone and bad timing of bond market. As a bridge to IPO, it provides liquidity. And with its asset-backed character, the investors would be more willing to finance in such a bad timing for bond market. Also, the step-up rate of 300 basis points over LIBOR provides an attractive interest rate during the long-term bond spread widen period. Last, the callable term allows FRN to be redeemed after 2 years of its issuance and access to IPO. Next question.
Okay.
Moving on to the third questions. How do we assess the adequacy of coverage? And will Standard & Poor's give an investment grade rating? First of all, we look at the correspondence between principal payment and the projected revenue of the company. As can be seen, the principal payment consistently increased from 2001 to 2004. However, the projected gross contract revenue consistently declined over the mentioned periods. This mismatch indicated that the collateral of the bond is not adequate. Moreover, as intangible assets, the collateral had uncertain cash flows and therefore did not provide a sufficient level of loss protection for the bond. To assess whether Standard & Poor's will give the bonds an investment grade rating, we take into account the following consideration. First of all, the 3 other rating agencies gave the bond an A rating. This indicated that the other rating agencies had a consensus that the bonds should be classified as investment grade. Second, the bonds were priced at 80 basis points over LIBOR. Take the figures on November 1998 as an example. The LIBOR was 5.04%. The bond yield was 5.84%, lower than the Moody's AAA bond yield of 6.41%. The low rate of return indicated that the Formula One bond was even safer than AAA bonds, and therefore should be considered investment grade securities.
Hold on. Previous page.
Can you hear?
Previous one, please. Yeah. So the last paragraph, you said the low rate of return indicated that the Formula One bond was safer than AAA bonds.
Yes.
You can see the investment grade.
Yeah.
Yeah. Triple B, if a bond with triple B rated ratings should be considered investment grade securities. So this has no doubt. And so what's the point? Investment grade. But investors want to have a double A or triple A instead of single A. So what's your point here? It is an investment grade bond rated A. Single A is an investment grade bond. So what's your point?
I mean, usually the higher rated bond should have a lower interest rate. And
right. So this is contradicting to the traditional. I mean, contradicting to Moody's AAA rated bond, right? So this is contradicting. AAA gives you 6.4, but the offers you 4. So what's the logic behind it? It doesn't make sense, right?
You mean which one doesn't make sense?
The last paragraph. LIBOR was 5.04, so the bond yield was 5.84, right?
Yes.
Lower than the Moody's 6.41.
Yes.
Higher, lower rated bond offers lower rate. Does it make sense? It's contradicting to what we learn, right?
So because based on that piece of evidence, we believe that the company Formula One should be rated higher.
So how so?
Because
Right?
because the low rate suggests that it's goes with a low risk.
Hold on. Last sentence. The Formula One bond was even safer than AAA bonds. What's the conclusion? 5.0, 5.84. It should be rated AAA plus, right? But it's single A. It's contradicting to your.
Yes, that is the figure should seem contradicting, but if in order for it not contradicting, the rating of Formula One should be higher.
Not in this original arrangement. So Formula One had to do something. Investors may go for a AAA rated, even safer. But now it's single A rated, right?
Yeah.
The whole thing is contradicting. So you have to reconsider, rewrite the answer to question 3. It's wrong statement right here. It's not safe, not safer, right, gentlemen?
Okay.
Right?
Okay.
It's a contradicting. All right. Question number. Okay.
Okay. So we will continue with the rest of these questions.
Okay.
The third consideration is that the payment schedule show that roughly 60% of the principal will be paid at the halfway of the maturity. So it's the cash flow of the bond repay of principal is quite early, quite soon. So it's a good investment. And the final consideration is the bond was backed by the company contracts. Though the contracts were intangible assets, the asset-backed characteristic of the bonds made the bond become safer and
not safer, please, gentlemen. Not safer. The second paragraph, Formula One bonds were backed by company contracts. These contracts are intangible assets. The asset-backed characteristic of the bonds made these bonds become riskier, not safer. Not safer. Are you with me? It's a contract, not real assets. It's intangible assets. You don't really know. That could go, receiving any cash flows. It's riskier, not safer. Right? Like, okay, gentlemen, your reputation, is your reputation safe asset? Your reputation, is your reputation a safe asset or risky asset? Your personal reputation.
For me, it is a safe asset.
Perhaps.
I think they mean different things. They compare asset without any collateral to asset backed by excuse me.
Okay.
They compare security without any collateral and security backed by asset which has.
Okay. Okay. All right. Okay. Okay. All right. Okay. Go ahead. Okay. Go ahead.
Okay. Okay.
So it's me, Vincent, and I'm going to cover the question 4. So the question 4 said, what would you do, if anything, to improve the chances of favorable offering? How specifically would you change the terms to attract investors? First of all, some of the main issues that made the investor think twice about the bond is due to this aspect. The first one is the amount of the bond. So the amount of the bond is 2 billion, which is considered very high. Then the second one is the maturity date is too long, 22 years, which put a risk of default of the company. The third one is the bond spread, which is very wide. And then the fourth one is the timing that looks unfortunate because it coincides with a sharp downturn in the international corporate bond market. And the final one is the lower coupon rate. So we come up with the solution to improve the offering by changing some of these terms to attract the investor. The first one is to lower the amount to 1.4 billion, which S&P will change the rating to the company, maybe around AA or AAA. Second one is to shorten the maturity date between 10 to 15 years, which can reduce the uncertainty in the future that can possess a risk of default. The third one is to give a higher coupon rate from 80 basis point over LIBOR to 100 or more. And the fourth one is to postpone IPO and wait for a better moment, since we know right now it's not the proper moment to IPO. The fourth one is to use credit enhancement, invite third parties to guarantees, which make the investor more confident and safe to invest in this bond. And the final one is to make a better company reputation, because Formula One is famous because they didn't transparent their financial statement, which is after or near the IPO. That's the time when they start to transparent their financial statement.
We will talk about the Project 5. Where would you attempt to follow bonds? The public market, private debt market, local market, or foreign exchanges like Hong Kong. Please consider how the size of the whole offering, need for liquid secondary market, and breadth and depth of investor interest affect your decision. And these are the advantage and disadvantage we do for the foreign market. And about our attention, we will attempt to follow bonds in the private debt market. As the case mentioned, the choice of public versus private issuance depends on a number of factors, including the anticipated size of the offering, the breadth and depth of potential investor interest, and whether and want to what extent there is a need or desire to facilitate for and relatively frictionless secondary market trading of the bonds after issue. And we will talk about the public debt market and the private debt market's comparison. And about the cost, the private debt market is more cheap, and its issuance time is, we will talk that it takes time well. And its size of the offering, it has limited number of large institutional investors, and its need for liquid secondary market. The private debt market is unrestricted in secondary market, and its breadth and depth of investor interest. The private debt market compared to the public debt market has more interest. So we can conclude the private debt market has much more advantage than public debt market. Also, we could structure the deal as a private placement by focusing on selling this deal to several large institutional investors. And this is our presentation. Thank you.
Okay. So I'll give you a quick question. So Formula One, I think your group didn't show the structure of the company. Ecclestone, the past CEO or chairman of Formula One, the company was or is very complicated, and I think you presented in a particularly when you introduce Formula One, you should introduce Bernie Ecclestone's the empire, the company ran or runs the Formula One. It's very complicated. I'll give you a quick question, because this case is about. Okay, I turn it back. Okay. So this case gives you a kind of alternative to finance its operation. I give you, say, this case is an intangible asset securitization. Okay. If a company like Formula One has so complicated structure, as an investor, will you invest in a Formula One corporate bond instead of asset securitization? Okay, corporate bond versus intangible asset securitization product. Which will you invest? Corporate bond or intangible assets of Formula One?
Corporate bond.
Okay, good. Why?
Because intangible assets somehow is like a short term, because all the intangible assets like such as contracts and something like that is not for long term, it's only for short term, and we don't know if the company is going to renew the contract or not. So that's why this will put a risk of the contract will not be renewed.
Okay, if Formula One can finance its operation by issuing corporate bond or Formula One, so-called Formula One bond instead of intangible asset bond. So you guys want to buy corporate bonds?
Well, depends on the purpose of the structure of the finance first, because as we can see in here, the maturity date is too long and then the amount is too big. So it might be a consideration for the investor to invest in the Formula One.
But I think the contracts or the broadcasting contract have nothing wrong to be the collateral, which can be faced, and then Formula One could issue intangible asset backed securities. There's nothing wrong with contracts, although it's intangible asset. And you said that it's way too long, 20 years. I agree with you, but 10 to 15 years are still long. Okay, I agree with you. Investors may invest in corporate bonds or intangible asset-backed securities. Either way. But how come didn't Formula One issue corporate bonds? Instead, they used the intangible asset to finance. What's the incentive behind it? The company, Formula One, the team didn't issue corporate bonds. Instead, they issued intangible asset-backed securities. Why not? Or why yes?
Because they are going to appear 2 years. You
understand? I can hear you.
I think because they are going to IPO in 2 years, so they want to have a good balance sheet, and they don't want to have too much debt, so they issue so they don't want to issue the corporate bond. Instead, they issue the intangible asset-backed securitization.
So your point is they wanted to be IPO 2 or 3 years later, right?
Yes,
and
they want to have.
Okay, I agree with you. That's one of the purposes to securitize its intangible assets. Other than that, what else you can think of securitize intangible issuing corporate bonds? And so that's one of the issues we have to face in the near future. I mean, for some other cases. And this case reminds us of the choices. You can issue corporate bonds or securitize your assets or issue stocks, right? 3 ways. Apparently, F1 wanted to do the IPO 2 or 3 years later, i.e., they didn't have stocks. They did have stocks, but they didn't want to issue extra stocks, so-called non-listed companies, right? They want to do the IPO later, and so now the choices to issue corporate bonds or securitize it as the intangible assets. And your answer is that they wanted to do IPO later, so they didn't want to have too much debt. I agree with you this point. But do you have any other argument that made or persuaded us that securitize its intangible assets is a good strategy? Other than that,
because ABS is remain at an early stage of that development in Europe and was not yet a mainstream financing vehicle.
Okay.
So that's why they hedgeable assets.
Okay. What else? Anyone here wants to give a shot? If you have two choices, let's leave stocks alone. Issuing bonds, securitizing your assets. If you can, which way you want to go? Let's leave stocks alone. How about IPO alone? Now you want to finance your operations, issuing corporate bonds or issuing securitized products, and why? I agree with you. If you don't want to have too much debt, you just issue securitized asset securitization products. I agree. But other than that, what else you can think of why you want to go for securitization? That's the purpose of this course, right? Anyone here? Anyone? I think early on I mentioned that you didn't show the complicated structure of the company. Okay, that was one of the keys that reminded you of the incentive to do securitization. Okay. And if you remember the process of securitization, last week I showed you the so-called true sale. NTUST Bank removed its asset from its balance sheet to the balance sheet of SPV. That's all. All you need to do is remove your assets from your balance sheet to SPV. How about issuing a corporate bond? What should you do? If you want to do something to finance your operation by issuing debt, what? Anyone? So now, there are three ways to finance your operations: issuing stock, issuing bonds, or securitize your securities. Why are MBS, ABS so popular in the world? Much popular than futures and options and mutual funds and perhaps ETFs. So why? If you don't take this course, perhaps you don't know assets can be used as a tool to finance your operation, right? And Formula One took the advantage of securitization to hide something. And this is the purpose of this case, other than the financial management, financial arrangement. Other than this, one of the purposes to show you why companies in the world were so eager to do securitization or securitize its assets. Anyone here wants to kind of anyone? Not just
Hi, sir.
Yes, please.
Is it for isolating the risk from the company?
Of course. Isolation is a good word from a kind of nice term Okay, isolation is good from investors' perspective. We as investors want this transaction to be safe from or isolate from your company's operation. Remember, because the assets are sold to the SPV. Anything happening to the company has nothing to do with investors. Remember this so-called isolation. I like this word, isolation. But my question to you again was, what's the incentive of Formula One to do securitization instead of issuing corporate bond?
I think they use the ABS because the ABS is attractive because they have the high yields relative to government and corporate debt and the large diversity of product choice, maturity, and payment sector available.
Okay, very good. Once again, this is from investors' perspective, right? Young lady, I don't know who you are because anyway. So this is a good comment on from investors' side, buy side, instead of the so-called sell side. Why would Formula One do securitization instead of issuing bonds? Right? Yeah, I 100% agree with you. Diversification, higher yields, same credit, AAA rated bonds issued by Formula One or by Microsoft. AAA rated bonds mean that they are safe, much safer than BBB rated bonds, single A rated bonds. I agree with you, right? But now, from issuer's perspective,
improve the various financial ratio.
I think okay. All the goods are included. Better ratings, better liability management, better liquidity. I agree with you 100%. But now, other than that, I just ask you guys to think deeply instead of just perhaps I have to straighten up. Otherwise, we're just hitting bush without getting the point. Okay. Now, if you were chairman of, you wanted to do this way, securitization. You want to remove your intangible assets, the broadcast. You want it. Okay, now I want to use the word. You want to hide the structure from all investors. You just remove your contract from your balance sheet to SPV. All investors have no right to ask how your company is running. Why? Because they have the right on the assets which were from your balance sheet to SPV. Investors have nothing to do with the company, so-called, right? But if you want to issuing bonds, all investors have a claim on your operation, on the purpose of why you do this, why you do that, why you want the money from investors, from bondholders. But securitization allows, you listen carefully, securitization allows issuers, companies, sellers to hide all the complicated structure of the company. That's one of the main purposes to do securitization. Have the benefit from investors. Is that the good purpose to do business in the markets? Everyone here? Yes. And Bernie Ecclestone, the previous chairman of Formula One, wanted to hide his operation from the general public. Okay, and this is because all you need to do is to remove your assets from your balance sheet to SPV. That's all. Okay. Hey, you guys have your own company, your own business. Which way you want to finance your operation? If everything else constant, costs are the same, about the same, what do you want to do? Bond or stock? Give me your answer.
Bonds.
Bond?
Yeah, bonds.
Why? Why bond?
Bonds and stocks, right?
Your name?
Hervin.
Okay. So
Yeah, I'm choosing bonds because I don't have to share my company with others, and the investors give controls to my company.
So I don't get it. You want to issue bonds? From a company's perspective, you want to, instead of securitization.
If it's bonds and securitization, I wanted securitization.
Oh, okay. All right. Okay, got it. All right. Okay. So just give you the conclusion. All right. So this case, not straightforward, but you need to note the why this, why that. I think all the details of cash flows should be reviewed sometime soon. And I think your group has done any cash flows forecasts, semi-annual or annual the statements to. So because of the cash flows were outlined in the case, you're able to analyze cash flows, coverage ratio, and all things considered. You're able to do the financial. So I try not to write or to continue the analysis of financial cash flows. So, and the main purpose of this case is to tell you why businesses do securitization instead of issuing bonds or issuing stocks. So that's the main purpose. Any other questions regarding the two cases, New Century and Formula One? Question? No? All right. So call it a day, and next week we will cover more question, the problem sets, and we have the six, and the group 6 will present. The sixth case is American Express, right? American Express, which kind of a genius design by Lehman Brothers. Although the company was bankrupt, but at least those guys on Wall Street were really smart to create something from nothing. Okay, although the case was old, the financial arrangement, manipulation was just genius. Okay, and if you let's call it a day and see you next week. Bye bye.